Hey guys, welcome back to another week of the Unnamed Cyber Talk. This week we have a special guest, and I'm going to let Eric introduce himself, and we'll go from there. So Eric, welcome.
Hey, thanks, Bob. Thanks for having me on, folks. My name is Eric Wistrand. I'm based here in Liberty Corner, New Jersey. I work at a firm called Couch Braunstorff Insurance Group. And my background is about 15 years of IT and IT security related consulting and project work. And in the last 4 years, I've developed a cyber liability risk specialty group here at our insurance firm. We're here to talk about a little cyber liability insurance.
Sure, because that since 2020, cyber attacks are way up, and the bad guys are doing a lot of stuff. But you shared something with me this week that I really wanted to get out to everybody, and I shared it with the guys here, and people were like stunned about this endorsement that you shared. And
well, stunned but not surprised.
Yeah, it's not shocking.
I'm stunned it hasn't been pushed out earlier. Is more my thing. Yeah.
It's been around actually. Chubb, I think the dates on that endorsement might have been late 2021, right? Okay. So. In just quick headline thought, and we can probably display that endorsement in this webinar, right? But it's named specifically. If you go up just a little bit there, Bob.
There you go.
Yeah. So it's a sublimit designed to address neglected software exploits or neglected patches, moreover, right? And so you'll see in the table there that there's a period of neglect, there's a column for co-insurance, and there's a column for limit of insurance per policy period. Now, essentially what this is forcing clients to do, and this is in basically every Chubb policy I've run across in our review of policies this year, is if a patch for a known exploit has been released by the manufacturer and the client has a breach and they had not applied that patch, there's a timeline that's explored as part of the incident response and part of the claim payment that essentially says if the breach occurred within 45 days of the patch being released, but the patch wasn't applied, there's a coverage limit in the policy that is the top line limit. So if you purchased $1 million in cyber liability insurance at the top line, you'll get that $1 million in coverage available to you as a top line limit. But if you go beyond that, so if you go beyond 46 to 90 days, your policy limit starts to erode and it goes down to $750,000. And then if you go from 91 to 180 days, it erodes further to $500,000. And then you go up to 365 days and it erodes further to $250,000. Here's what this means, right? If you're not regularly patching your systems, your cyber liability carrier is going to start to erode the available coverage that's provisioned to you as part of that policy. And they're doing this for a number of different reasons. They want customers to apply patches in a regular cadence that helps to limit the attack surface area and the cross section of what could become a cyber event.
Right.
So if you run into clients and talking about, MSPs talking to their clients and their internal IT, if you're not regularly patching and your policy has this provision in it, which is not just unique to Chubb.
Yeah.
Chubb is the first one in our experience to do it on a very broad basis. But you can't just let this run on autopilot, right? You have to work with your MSP. I'm speaking to the clients.
So Eric, are amendments like this coming as automatic amendments, or are they only showing up on renewals?
They're showing up on renewals. Different carriers are beginning to adopt this type of thing. As I said, Chubb is the sort of first to go about this in a broad-based fashion. But it's becoming, I expect it over the course of this year to become more ubiquitous across the other cyber insurance carriers that are majorly writing.
Yeah, I was looking at the date. I saw 6/21. It's like, wow, it's been out there for a while, and this is the first I'm hearing about it, and I haven't, and it's crazy.
Yeah, from my experience, I see more Travelers ones, so I haven't seen that in Travelers, but they have a whole litany of other things that they require you to do outside of patching before you even get to it. So, and is Chubb Travelers? I know they split based off of revenue the company. So I think sub 50 million they have different requirements than they do over 50 million in
That's
revenue.
right.
Is Chubb the same way?
Yeah, they are similar.
Okay.
The insurance marketplace is bifurcated into a couple different layers. So what you tend to have is what I'll call like the what the carriers would call small business, right? And that's usually under 35 to 40 million. In Chubb's case, I think it's 50 million. In Traveler's case, it's 50 million. And then above that, they refer to it as called the mid-market, right?
Gotcha.
And then there's a line, usually it hits at like $1 billion in revenue where you get into the large lines category, right? And that's where you'll see a lot of specialty type manuscripted policies where the endorsements are negotiated in a way. And so, if you're dealing with a client that has over $1 billion in sales, they'll have probably what we would refer to as like a tower of coverage. So they may have a number of different insurance carriers participating in layers of coverage. And even their baseline coverage limit of, let's say, 10 million might have participation from a couple underwriters at Lloyd's on those. And I just have to say, the cyber insurance marketplace has been the Wild West. There's very little common definitions of coverage between the carriers. So if you're switching from, let's say, an admitted product, and admitted means that the State Department of Banking and Insurance has approved the rates and the forms of those policies, to a non-admitted carrier, which a non-admitted carrier has a lot more freedom over the rates they charge and the forms that they make available for endorsements and things of that nature. There's a big difference in one carrier to another. So let's say your firm was with Coalition on their admitted product, and they had a set of endorsements that were there, and they maybe had funds transfer fraud protection, but now they're going to a non-admitted carrier because the company's gotten bigger and they need higher limits. You'll see very stark differences in the endorsements that are available. So, for instance, invoice manipulation coverage may not be available, and that's a particularly important endorsement for business email compromise.
Absolutely.
Yeah, that's what we see more than anything right now is business email compromise with the invoice manipulation or payroll changes where they try to redirect people's paychecks and things like that.
Yeah.
We just had a customer got hit by that because they don't have controls inside, and they decided that, hey, an email from a random person to change payroll was a good idea to change. So,
right.
So, Eric, real quick question is, how hard is it for people to get insurance after they had a breach?
Ooh, good question.
Yeah,
That's
a question.
So hard is there's nuance to it, right? So usually what happens is a breach occurs, incident response gets involved, and they usually get a product like CrowdStrike Falcon or Huntress or one of the other EDR tools or the next-gen antivirus tools that look for lateral movement and all of those great controls. And they have that tool for a period of probably 30 days as included with their incident response coverage. And then those customers tend to get really serious about security, right? Because they don't want these things to happen. So what the components of information security layers that they should have been investing in before but hadn't, and they've been on a cost control kind of basis trying to limit IT costs, the breach happens, and then there's like this flood of money that's spent not only through the claims process, but additional controls that are implemented to help prevent these types of breaches from happening that are done at the discretion of the client, but really, they should have been done before. So what ends up happening is the client ends up becoming a better underwriting risk. So the underwriters look at them and say, they've gotten burned. They know that this is possible. They see the value in insurance, and their controls have been elevated. So they're actually a better risk, right? And what ends up typically happening is you don't want to move a customer from one carrier to another with an open claim, right? So they'll probably stay with that incumbent carrier for the next renewal. And that next renewal is going to allow that carrier to kind of make a little bit of their money back, right? But the carrier has kind of in their calculus, and the underwriters are thinking through this, that they want to see a narrative and in real life, they want to see the receipts of what you've implemented to get better, right? So having just been through this recently, we were able to negotiate essentially what is a flat renewal on that insured's base limit, and provide options to go to higher limits. And the insured may choose to go to higher limits, and that's wonderful. But from the underwriting perspective, there is capacity in the marketplace, and there's coverages available for any buyer. And he's a strong, almost every buyer. But it's whatever your willingness to pay is that lets that market clear, right?
Got it.
It's going to be more expensive. You know, if you currently have, for instance, a client that has 1,000 employees and it's sort of a nonprofit type thing, and has maybe 60 million in revenue, and they're paying $30,000 a year for a $2 million limit. In the past, it used to be really hard for them to get to a $5 or $10 million limit without demonstrating, hey, here's what we've done with controls. Now it's the market has softened a little bit post-COVID, because what happened during COVID is underwriting requirements kind of went like this. The idea that everybody working from home changes the risk landscape.
Absolutely.
So logical security is a lot more important. And your spread, as you mentioned, Bob, in our email exchanges, your spread of attack surface is much larger, right? So the insurers really wanted multi-factor authentication on everything, right? And clients were filling out that form saying, yeah, I have multi-factor authentication. The reality is, we all know from an IT perspective that, you may have multi-factor authentication on your, just throw out an example, on Office 365 for your email and access to Azure and all that stuff. But you probably don't have it when you're logging into the physical machine, or you probably don't have it on your admin accounts that are local to you. You certainly have them in Office 365, and you probably don't have two-factor authentication on your firewalls, for instance, to get into the admin interface on your firewalls.
Sure.
No,
that question became much more detailed as the underwriters started to better understand the underlying risk. And of the major markets that are out there, you have some real pro underwriters that understand IT and understand security that are participating in this process, right?
Well, to go back to your point, Eric, I mean, I brought this up before in Illinois. We just had that case with Travelers that was, I think, maybe 2022, where they basically denied the claim. They denied the whole policy. I think it was like $2.5 million specifically for the MFA. And they originally challenged it, and they dropped the case pretty quickly.
Yeah.
Well, that company had already been hit with ransomware before, I think, too. So then they renewed their policy, and then they claimed that they did it. I might be wrong on that, but like there was one that was like that.
I'm pretty sure that's what I'm pretty sure.
I have a question. So for producing evidence of the controls you have in your company, and for anybody out there that's listening, it's really just like policies, procedures, technical controls. So whether you're running antivirus, EDR, things like that, where do you see that as a requirement, where they actually produce evidence that they have this stuff in place? Like, let's say it's a new policy. It's not like somebody that's already had a breach. Is there a revenue limit where that comes into play? Because I haven't seen it yet for any of my customers, and I have customers that range up to about 250 million.
So the carriers are particularly careful about how they go about the process of maintaining documentation for that. I'll give you an example. There are some carriers that have active underwriting, which, like Coalition, their active model is to do active vulnerability scans, ongoing vulnerability scans on the client's IP addresses and presence, right?
External only.
External only, right? Not the real cool stuff that you have, Bob. And so there is a revenue limit, because when the risk gets large enough, they want to see demonstration of controls, right? They're going to start asking for how you comply with like the NIST frameworks on security, right? So like,
Eric, we'll just pause for a second. So is that limit a $5 million policy, or are we talking about a 20 or 100 million policy?
It starts to come into play when the insured has a lot of records under management.
Okay.
Right?
Okay.
Got it.
It also, it probably gets triggered in some cases on revenue, and certainly gets triggered when you're asking for much higher limits, right? But the folks in the under 50 million in revenue that are sizing their limits between 3 and 5 million probably won't have that same attestation, but they are filling out that application. And what's on that application is a representation, right? It's like a warranty and saying, these are my controls as a business, and this is what I'm going to regularly do. So for instance, if I say that my backup strategy, like let's say there's questions on the application similar to, do you perform backups of your core and critical systems on a daily basis? Do you store those backups offsite? Are they, air gapped in such a way where you require different authentication to access them than Active Directory? I answer yes on all that. And I have a ransomware event. The carrier is not going to be particularly willing to authorize me to make the ransom payment during the claims process, because they have to authorize it. You can't just say, all right, cool, we're good with $1 million in ransom payment and my carrier is going to reimburse me. No, the carrier has to authorize that before you send it. So the underwriters are participating in the claims process. They're looking back at the application, and they're sort of comparing that to what led to the breach, right? And so in the case of Travelers, if a client is attesting that they have MFA, and then they get a business email compromise and it shows that they didn't have MFA, it gives Travelers grounds to deny the claim for misrepresentation.
Yep.
Right? So compliance with your application and your cyber liability policy, and making sure that that's an active approach that's reviewed on a regular basis, is quite important.
So you said compliance. People don't think like that. They think compliance is only regulatory. Nope. They don't think, especially a lot of the customers that we have, like they don't see complying to, they just fill out that attestation. We talked about this in the green room before. They'll have somebody that has no qualifications fill out an attestation, and they've never actually reviewed it. Exactly. And then they just submit it. And it's like, and then when they have like a problem, it's like, I was wrong on that. Well, consequences.
So
Eric,
guys,
getting back to what you said, one thing you mentioned, which was, as opposed to the value of the company, records under management. So can you just briefly describe what that is so people are aware of what that difference is? Because I think it's a pretty significant one.
Let's say my business is participating in like title insurance for real estate closings and settlements, right? I have, as part of that process, I have a number of points of NPI and PII and personal financial information as well. I don't have any HIPAA related stuff, but let's say in that business, I have to retain those records for 15 years, right? There's a regulatory requirement based on the state to do that, right? So if I'm a high volume shop, and let's say I'm doing a lot of refinance business, I may have anywhere between 100,000 and 200,000 records that are in that time period, right? So if somebody gets into my system and hangs out for a period of 2 weeks and does some reconnaissance and is able to determine their way into getting access to my core management system, they may be able to to dump a report of all that information. They may be able to go and pull all of my unstructured data in documents. And now what's happening with AI is that unstructured documents are not as obfuscated secure in a way as they were before, because I can take a couple million pages of PDFs and go through and look for anything that might be interesting or personally identifiable, right? And so really when an underwriter looks at it, and frankly, when an agent is looking at it before the underwriter gets it, they should, first of all, have a very strong knowledge of how that insured does business, right? What is the nature of their business? They should have a strong understanding of the systems that customer has in place. And then who is managing those from an IT infrastructure perspective and from a security perspective. And they should be interviewing those folks. What we discovered is the majority of the insurance market from an agent basis is paper pushing. And we don't want to be paper pushing, right? So it's important to us to really deeply understand what the nature of the business is, who's responsible for the systems, and what data the customer actually has, because that helps us to better negotiate coverage limits on behalf of the insured with those underwriters. But the underwriters are really looking at that carefully, because they know that's where their notification costs are going to come into play, right? That's what's really going to scale the size of the claim when there's a data breach.
Tremendously, yeah.
Does that help?
Absolutely.
Absolutely.
This has actually been great, and we are running long on this one. And I think that I've probably got 5 or 6 other topics to bring you back to talk about. And right now, the message that I want to share with everyone is, you might have cyber insurance, which is great. You might not be patching everything. That's bad, even if you don't have cyber insurance. And if you're not sure if your guys are really keeping your networks up to date, keeping everything secure, reach out to any of us, and let's have a conversation and see how we can get things moving along.
Absolutely.
Yeah. Great. Can we leave with let's leave with one more thing on that. It's not just about patching what you have today. If you're running software that's not supported any longer, like Windows 7, things like that, that's all in the same boat. And Windows 10 is going to be there. Well, Windows 10 is going to be there in
next year,
October of 2025.
Well, Chris, also, what about the guys that don't want to pay for the QuickBooks upgrade because they're just going to keep using the old one? Same thing.
The old QuickBooks are trying to keep those in.
You're gonna give me night terrors.
There
honestly,
on the cyber, there's a question on the cyber liability application that says, do you use any end of life software, right? And if you say no, and a breach happens through that end of life software, they will deny coverage, right?
Actually, Eric, that did come up in the discussion I had with somebody yesterday. Is what if I don't have a bunch of unpatched systems, but the breach didn't happen because of the unpatched software? We're gonna have to prove it.
Yeah,
it's going to happen through incident response, right? Because I'm sure you guys have seen the reports that the incident response teams come back with. Those guys are absolute pros, right? Yep. And they find chapter and verse of what happened.
Yep.
Right.
Cool. So let's move on, and we will definitely get you back on a future call. Everyone, have a great day.
Thanks for coming, Eric.
Appreciate it.
Appreciate it.